Good evening and welcome everyone to the Power of Passive Investing meetup. We are excited to see some old people and see some new faces. We're also really excited for our tonight's guest, Maggie Cheung. Maggie is very special, in particular to me for multiple reasons. As one of my investors, and she'll share the story with you, and also one of my probably closest neighbors in the real estate space. Yes, Maggie and I live in the same town, and our kids have gone to some of the same schools. So it's great to have some of the local real estate investor connections. And also Maggie has a really powerful story that she's about to share with you tonight. So without further ado, Maggie, welcome. We are thrilled to have you with us today.
Thank you. Thank you for having me on.
Absolutely. Yeah, so why don't we start with you sharing a little bit with our audience about yourself, your bio.
Yeah, I guess it's as a starting point. I was a career auditor, so I have a background in CPA. I don't do taxes, so don't ask me any tax questions. I'm not going to give you a good one. So I've been an auditor for 13 years and been climbing the corporate ladder for a while until I think many people, after having my second child, my priorities kind of shifted, and I just didn't see myself being a good career employee or could keep going climbing the ladder and dedicate 100% of my time being my W-2 and also being a good mom. It doesn't make sense. It doesn't make sense anymore for me. So at that time, I just decided that it was either me or my husband take a step back to watch our kids grow until we figure out what's the next step. So my husband was also okay to step back, but I did not want to do that. I said I want to be the one who take a step back. But after a bit of being stay-at-home mom, I don't know how stay-at-home mom does it. It's amazing, but it is not for me. So I kind of have to figure out like what I want to do next. And it was either then I really wanted to go to real estate all my life and for something. So it was either then that was 5 years ago. And so I just figured out, okay, should I give real estate a try or do I go back to corporate? And I just reasoned out that I can always go back to corporate. If I don't give real estate a try, it's just, I will never realize what can the potential be out of it. So that kind of led me down a path of probably a lot of you guys, like podcasting, listening to podcasts, reading books, and really reaching out to other real estate investors in locally and also in other conferences. And that's where I met Alina through her meetups that she runs monthly. And that was 5 years ago. So,
and that was in person. I think that's important.
It is. That was a lot of fun.
Yeah.
Yes.
We'll reinstate some of them in person for sure next year.
Yes, and then from there, I kind of dipped my toes in different types of real estate investing. So I became an agent. I gave myself 1 year to figure out what real estate investing was and how do I transfer my skills. So with that 1 year, I became an agent. I went door knocking, cold calling, and then I also shadow a flipper who is also a female, but she's also a former accountant. So I shadowed her for a few months, 3 or 4 months. We're still very good friends. So I still invest in her flips to this day. And also invested in Alina's through Alina's syndication. That's kind of my first dip in the toe in syndication world. And then after that, it's just kind of snowball, and it wasn't easy. But now we most recently we took down like larger deals, multifamily, not I'm say we because I have my two other partners who's also former auditors and former CPAs. So we travel in a pack. It was really, really good to work. I really enjoyed working in team environment. That's similar to my corporate setting. So I like that we have a team, and you do need a team to run these deals because it is a lot. So that's a snippet. Hopefully that covers.
Yeah, no, thank you, Maggie. That was a great story. Thank you for sharing. So let's step back a little bit and talk about how did real estate enter in your world? Was it because you came across our meetup, or was it because you were interested in real estate? Or like kind of walk us through that process. And did you start thinking about this while still working as an auditor, or you first left your job and then decided to look into it?
Yeah, so before I guess before I really jumped in on both my feet, my definition of real estate, I think everybody knows in some context, real estate will grow your wealth. Some context, or either through the Purple Book, which is Robert Kiyosaki, Rich Dad Poor Dad, or some avenue. And even my family, they have their own version of acquiring real estate, but their way is kind of a little bit dated, because the way that they are thinking about it is just buy one property at a time, pay it off, and then eventually it'll pay you back, right? So that was my method of acquiring real estate while I was working. We actually have two properties, two single family. Well, it's not single. One is a condo and one is a townhome. So those are the two that we had at that time before I quit my job and transition full time in real estate. So that was an extent. And that was slow. And it is hard to do it in New Jersey because you need a lot of capital and you're probably not going to get much cash flow.
Well, not that it was slow, but in addition to having full-time job, you also have a family and raising kids. So it was a lot to manage. So let's start with that. So
Absolutely.
You were managing both family and your career and trying to do real estate at the same time. So that was a lot. And then talk us through your passive investing. What was your experience like with syndications? And then at what point, while passively investing, why and how did you decide to dabble into the world of active investing, or becoming a general partner, as they say?
Yes. So my first introduction was syndication, was actually through you, and you introduced me to my first deal, and I did not realize that I can invest in this types of deal. Except I worked in a bank as an auditor, right? So I seen these deals packaged together, these much larger deals from the bank's perspective, and they offer to their investors that has much more higher net worth than I do. So there was no way that I can participate. Obviously, I couldn't because of conflict of interest. There's a lot of things that we cannot invest in, even single name stocks. There was a lot of prohibition. So when I quit my job, it was just like, oh, I can invest in this type of deal. But obviously, the career auditor hat, it's very hard for me to jump in. So I must have asked you a bunch of questions at that time, and also the sponsor as well. And then after a certain point, it's like, okay, we have to, either take a leap of faith and just go in that first one. So luckily, it was a really good experience. So I think that was something that I had to thank you for walking me through, and also the team, and it was a very good experience. So after that, I did invest in another one with you, and then a few more with other types of sponsors, because I wanted to kind of taste the flavor of different types of sponsor and operators out there. Because eventually I was starting seeing this type of process seems like something I might be interested in. So I kind of want to see how other people do it. And I think the the good thing about it is that because I was an auditor, I kind of know the process behind the scenes, because the bankers, they package a deal, they do the due diligence, they file the SEC filing. So there's a lot of things that I'm familiar with the process. So it wasn't as scary to me. So I think that made it easier for me to take the first step to participate in my first syndication.
Got it. So your
Yeah.
background and prior expertise as an auditor really helped you to decide to move forward with the deals in investing.
Yes.
Makes sense. Can you walk us through the process? So you kind of touched upon it a little bit in your latest answer, saying that you saw how various syndicators were executing their deals. What led you to decide to become a general partner yourself and take that route?
Yeah. So I'll say after a certain point, as an LP, I wanted to take a look a little bit more closer on the other side. So I wanted to know the soup to nuts of how it works behind the scene. So
Sure.
in order to do that, I cannot be an LP the whole time.
Yeah, and Maggie, I'm sorry, I'm gonna briefly stop you. For those that may not know, LP is limited partner, is essentially passive investor in syndications. I don't want to assume that people know, so it's better to clarify it. But sorry, go ahead.
Yeah, so I wanted to take a peek on the other side. So I want to see, because at that point in time, after I tried out like the different type of real estate investing, from single family to door knocking, cold calling, and doing having some visibility to how flipping houses work, I feel more comfortable in multifamily investing. It's almost like a team sport, and I feel more comfortable, like how because of my background, I want to see more of it and see how it works. So that was kind of my logic. It's like I feel like this might be something I want to be doing for years to come. So that's when I wanted to figure out, how do I get on the other side.
Got it. Okay, and then so when you finally got to the other side, did you start syndicating on your own, or did you find partners first?
Yeah, it's if I could do it on my own, but it would be a very, very long time, because nobody in my network is doing something like this. So my friends, my family, they all have not heard. At that time, it was not really known that much. So I have to figure out how to getting closer to the people who are doing these. So I did join a mastermind after like looking at different types of mastermind group out there. I joined one that I feel comfortable with, and just to caveat, like, you're not going to find a group or mentor that is 100% that's going to meet all your needs. So you got to figure out what is your topmost needs, and figure out that you have a good culture and vibe with the person or group. So so I joined a mentorship group. Along the way, I also my coworker from the job that I left, she also was looking to do something else. So and I must have been a really, really good pitch. Give her a really good pitch that she joined me on this journey. So I already came in with I guess a business partner. But in the mastermind group, we also find a third partner. So that's why we have three of us. So I think each of us have our strengths and weaknesses that we are able to complement each other, and that's why we sought out this type of partnership. And I think we've been doing very well. There's not going to be, it's not always sunshine. So there's some very tough moments and tough conversation, but we've been together for 3 years. So I think we're doing pretty good. It's like a marriage.
Yeah, no, absolutely. It is like professional marriage. Absolutely.
Yeah.
So, Maggie, if I were to sum up your approach towards finding a mentor, I like how you kind of said it, you will not find the perfect one. So it's more or less like the Pareto principle that, 20% of 80% of the results come out from the 20% of the work. So find someone who can cover that 20 most important percent and who will help you to produce your 80% of the results. And that should do it essentially. No one's perfect, which is true. And then if we talk about the partnerships, yeah, you said you were able to find two great partners, and you are able to split responsibilities. So can you walk our audience, how did you guys decide on splitting the responsibility, and are you doing what you have originally decided to do in terms of the split, or have you gone through some sort of trial and error? Let's say you do A and then Lana does B and so forth, and that has changed. So walk us through that process, please, of splitting the responsibilities.
Yeah, that's a great question. So because our team is so small, we have right now we have each other, we call each other lead in certain area, but at certain time we jump in to help each other too. So and in the beginning, it was when we didn't have any properties, it was myself and Lana, my old coworker, became my business partner. We were both like deal hunting. So we will be meaning like we were looking at deals, we talk to brokers, we go out to a property, we do tours, we talk to the property managers to get the numbers, insurance broker, and everything to compile the deal together. So we, in the beginning, it takes a long time to find the right deal for you, for us to meet our criteria, but also like to figure out like how to underwrite at that local level, right? Because you can't just have a blanket underwriting across the board. So in order to find the right deal, you have to look at a lot of deals, especially when you just started out. So it took us about like 100, I think we did 150 deals, and over the course of a year and a half before we found our first deal. So it took us a while. So at that time, we did participate as smaller general partners in other deals. So that kind of gave us a little bit more insight as we before we took down our deal ourselves. So we were able to kind of gain insight from that. But over time, when our portfolio grew, Lana, her job kind of shifted to more asset management. So she's like lead asset manager, along with another more experienced partner that we have as well, because we recognize that we haven't been in the multifamily for a long time. So we really value a partner that's been through the ruts and been through the ringers, who knows a lot more, who's a lot more experienced and have a lot more white hair than us, to kind of lead in that aspect. But Lana is kind of like working with him to kind of develop that asset management piece. And then we have another partner, Jen. She is our investor relations. She kind of like started up that way, and then and she's been still growing in there, but she kind of transitioned a little bit to do a little bit asset management lately these days. So I'll say, and myself, I'm still in acquisition. So even though there's not much deal going on, I still look at deals. I still look at evaluate deals and how we strategize in the future, what we're thinking, or what type of if we should look at positioning ourselves differently, and structure wise on the deal going forward. So that's kind of my lane, I suppose. Yeah.
Got it. Thank you for sharing that, Maggie. So if I were to summarize your team's approach towards splitting the responsibilities, it was more or less fluid, and you guys kind of fell into your current spots based on the interests and based on the knowledge and desire to learn a specific area. Would that be
yes,
the right assumption?
Yeah, absolutely. Because I think the first year, the beginning years, you don't know that much where you fit in. So you kind of have to try out differently, and we kind of have an evaluation every so often. We talk a lot, so we evaluate whether everybody is still in a happy place and if everybody is doing their thing that they love to do every day. So I mean, we still have things that we don't like to do.
Of course, of course.
So we try to know, we're learning how to delegate that a little bit more.
Got it. But if any of your partners need help in their areas, whether it's vacation or for personal reasons, one of the other partners would jump in and help out, right?
Yes.
Got it. And is your plan to continue staying fluid, or you think at this point everyone kind of has their expertise in areas they're responsible for, and you're going to stick with it?
I think we have a lead in each one, but I don't I'm not the one that say never to never. I think it's we constantly evaluate ourselves. Being like former auditors, we evaluate ourselves internally, like are we in the right spot? How do we grow? How do we keep each other motivated? So we have those types of conversation.
That's great. So you guys more or less staying agile and allowing others to grow within their roles and beyond their roles, making sure that the company is continuing to grow and evolve as well, essentially.
Yeah.
Awesome. And we got our question from the audience. Louis is asking, I'm currently in a W-2 corporate world in which I'm looking to transition out of. Can you recommend any mastermind groups to become a sponsor?
Well, there's a lot. There's it depends on which type of asset class you look for. I know so there's Jack and Geno's, they do like I think up to 50 units mostly, but there are people who are done bigger deals in that group. There's I know Joe Fairless had a group. I don't know if they're still doing it. And who else is out there?
Brad Cleave.
Oh, yes. And Brad Sumrock is very big in Dallas, Texas. If you're looking for triple net leases beyond multifamily, Ash Patel, he's amazing. And and who else? Alina, you probably have more in my head.
I used to, yeah, when I used to go there to their conferences, yeah. I think you named a few of the main ones.
Yeah.
And folks, I would say the same thing as Maggie said. There is no perfect mastermind. There's no perfect group. You need to speak with members of each of them, find out what their feedback is about the group, but then make a decision based upon your personal preferences and interests, because each group is different. I'm sure pricing is different. It probably has grown a lot as well, but it's also still very different. And you need to get a feel of the groups before joining them. Gina's brother, Marco Barbara, and Chris Jackson, right? They have a
Chris
group.
Jackson. Yes. Yeah.
I think it's called Make It Happen, right? Or something like that. I forget what they called. I just know their names.
Right.
I believe it's MIH.
Yes. I think Jason Urisi also have one too.
Oh, he still has. He used to have one when
Yes.
he was here in Jersey. After he moved, I don't know. I kind of lost track of what he's doing.
Yeah, 7-figure multifamily.
Okay.
I think multifamily is also one too. So there's a lot out there. It's just you're gonna have to interview all of them, talk to the people that's in the group. You want to ask, I guess it's also like you have to ask yourself, what do you want to accomplish? Is it to because you be a sponsor, you can be a GP. A GP and sponsor is kind of like related, but what roles do you want to play? Do you want to be the one who's taking down the deal? So you would need that skill set. So you want to look for a group that has that skill set to take down deals, deal hunt, or you want to be a capital raiser, like you raise capital for deals, then you need to be in the group that does a lot of deal flow. So you kind of have to have the answer. If you come in with a lot of capital, then you have a lot more options. So I would say that for short.
That's very true. And folks, if you're looking to get feedback from these groups, I would say Facebook is a good place to start, or Bigger Pockets. A lot of the members from these groups are primarily, I would say, in Facebook, and some are in Bigger Pockets, some are even on LinkedIn. But I feel like it's much easier to connect and communicate with the people on Facebook in general, for that matter. But anyway, thank you, Maggie. So going back to your experience, if you were to look back at your passive investing journey, what would you say were the lessons learned from that journey? Like, what have you learned? What are some of the things you'd say, yeah, I'm going to continue doing it this way, or some of the things you're thinking, oh, I should have done it differently as a passive investor?
Yeah, I don't think that's a good. I actually thought about this question for a bit, because if I can look back, there's never a look back, because you can't never regret it, because you will never get started. So I think my biggest takeaway is like, from a passive investor, and I love being passive because I don't have to do any work. All right, so the most work I have to do
with the kids, right?
Yes, the most work I have to do is really vetting the operators and looking at the business plan and see, evaluating two things: their experience and their business plan and their character. So that's the most heaviest work that I have to do. So I think that what I learned is like, I haven't like ever invested more than the minimum. So that actually worked out for me. And also, I invest in things in an amount that I know that, if I lose it, it doesn't hurt my family financial situation. So that's something I'm very, very aware of. So that's one. I think through experience over time, because I don't, even as an auditor, I don't get 100% right. There's some deal that didn't do well in my first couple one of my first 6 investments. Not yours. So and it was like a hemp farm that was really big, but now I'm looking back, it's like, okay, do they really have the experience that they probably did not have that as much experience, good character, but not enough experience, that probably did not see a lot of the foresight that's happening in the industry that's happening. So I would say invest in the minimum. I like to diverse. I think that really helped me, help us to have different types of investment, especially in investments that I'm not an expertise on, but I can understand the business. If I can sit down with you and you can walk me through your business plan and it makes sense, and I have my question and you're able to answer it, then I'll feel comfortable in investing in the minimum. But there are times when I think it is simple, but there are times when I think I was pitched last year. There was I think it was almost like a debt fund, and it's a fund that spits out 16% and 16% return. Yes. So I want to know, like, hey, how do they make that return happen? So and it's a fund, so you don't have that visibility. So, but I asked that question anyway. So, like, what is it? So they do what is turned out. So they invest in other companies, and so I was like, okay, how do they make money on that part? Like, they buy companies and then they make money off of it. But these are companies that's dying. How do they make money off of it? And so, but then the more I ask, the more questions I have. So. And I see more the people like doing more PR, like a lot more capital raising than I'm trying to understand, like, who actually does the operation behind the business. So that makes me question even more. So anyway, so ended up I did not invest in that because I just could not figure out a comfortable way to feel comfortable about the deal. And once you open the can, it's like, okay, it's never ending, so I'm not gonna put my money in there, no matter how lucrative it looks like. So I think diversify, minimum, do the minimum investment, vet the operator, and I think through experience you do better. And I think because my network has gotten bigger, I'm able to ask other people who may have invested in or have some knowledge of someone always knows somebody. So I think from over time, I was able to acquire more people who I'm able to tap into, like, hey, have you invested in so and so? They either say yes or no, or they tell me like, okay, actually, I can refer you to somebody else who has experience. So I think that's yeah. So that's kind of wrap it up. But I still do passive investments. I still do. That's because like it's I don't have to do any work, but and I love the diversity of it, and it also give me a good it helps me connect with other people too, like the operators and I have questions I can ask them. I feel more easier to ask them because I invested them, so I can connect with them. And I also have a solo 401k account. So if you don't know what that is, it's just like it's my retirement fund, but I have control over it, but I cannot invest in something I'm a general partner with. So I can only use it on LP investment. So I use that account to invest.
Sure, absolutely. Great, Maggie. So the question came from someone, how we may get in touch with you, Maggie, on future deals and learn more about you and your experience as a sponsor. So Maggie, maybe type in the chat your contact information, whatever you want to share, either your website or your email or whatever you feel comfortable with.
Sure, yes.
And then after you type it, maybe you can talk a little bit more about your experience as the sponsor. So this is Maggie's website, Maggie and her team members. And Maggie, are some of the projects that your team had worked on listed on Sage Investing Group website?
Yes. Okay. So we have about right now, I think in that portfolio about 2,000 units. And then of the 2,000 units, we have 388 of it. It's where we are more heavily involved because we took down a deal. We did more responsibility in the GP partnership standpoint.
Talk about your markets. It's all multifamily, right? It's all apartments.
Yes. Yep, all multifamily. That's what we specialize in. It's mostly workforce housing, affordable, not affordable in terms of like more like workforce housing, collars tenants. So all our properties in Alabama right now, but we look for Alabama, west of Georgia, and also a little bit of Tennessee area. That's kind of our market, and we picked that area because it's more it has less I think from a tertiary standpoint, Alabama has a very good like landlord friendly state, and it's the cost of living is cheaper there, and so it was a very good, particularly where we found our deal is in Dothan, Alabama. It's right above Florida, so it's not quite doesn't have that feeling of part of Alabama, because sometimes when you go there, it feels like part of Florida, because it's only literally 16 miles from Florida state line and 20 miles to Georgia state line. So so that's kind of our area. If I think the fundamentals are all there, and the town is reinvesting itself. It did really well during COVID, and their sales revenue has gone up in that town even throughout COVID. So it's kind of like a shelter, like almost like a shelter from like what the macroeconomics is doing right now. So it's I can talk on and on, but
sure. So are your plans to continue investing in that market?
We are, because we already have operations down there, so it seems it's easier for us to pick up deals there. Or underwrite deals there because we're familiar with the territory. We know how to operate there, so that's where we feel more comfortable. It'll be harder for us to even underwriting is not a problem. It's operating. Like we got to make sure we're operating right too. So we feel comfortable in that area.
And when you say operating, you mean bringing the right property management team on?
Bring the right property management and also our team feeling comfortable and managing and having that relationship. It's not just like vendors and also like the local market, like having knowledge with the town. It's really helpful too, and how taxes is going to work, and so all that information is really helpful. And I talked to the chamber economics and the economic development in the chamber of commerce. So because I wanted to know what's going on, and I'm on the town Facebook group just to kind of take a peek. So what's going on, what's happening, so that so that all that little detailed information is really helpful.
Oh, that's amazing. Yeah, no, you're bringing up important points. As investors, I think it's very important, especially dealing with economic development committees. And, I know it was a firsthand experience from being an active member here in our town in Fairlawn, being part of EDC, Economic Development Committee, and the Chamber. There's so much going on. And that's like one of the best places to hear about what's going on in town, what kind of businesses they're looking to bring, if they have any new developments, or if they if they have a need for whether it's affordable housing or just housing period in general. So yeah, that's excellent that you're staying in touch with them. And so on that note, do asset managers or any of your team members travel to visit the property from time to time as well?
Yes, yeah. Right now we're like heavy in the renovation plan, so our asset manager, actually the team was there, and the whole team was there in summer.
Oh, wow.
Yeah, and then on the next few months, as we ramp up in the renovation plan, our lead team manager, asset manager, is going there every month to check in. So
I see.
this is on top of the property manager. We hired the property manager. They have a kind of like an in-house construction team, and they have a construction lead too. So, but we want to be overseeing what's going on.
Got it. So, so your asset manager is visiting the property every single month.
Yes.
That's amazing. Got it.
And he also invested in the deals too. So he wants to make that. We make sure he's tied in.
I see. Excellent. No, that's a great way to make sure that the person is interested in the deal success. So that's great. Next question from Evan. What steps and resources did you utilize to determine the areas you decided to invest in? Excellent questions.
That's yes, good question.
Steps
There's a
and
lot
resources.
of yes. So we one of the more common ones is CoStar reports. It's helpful sometimes, but in tertiary market it's not as much. There's not going to be a much data points you can get. So, but so one of the resources we look at is you want to look at the competitors. Who are your competitors? So apartments.com, you can scope out who in the area, who you're looking for, who is in top end, and who is who has done some kind of renovation, and what rents are they getting. So, and then you can measure up from your target subject property and how it can stack up with the other properties. So we were able to tell from that standpoint, our property is $200 below market rents, just off the bat, because they just haven't. It's just like a mom and pop owner, and they didn't want to raise too much. They want to keep it full. They don't want to do too much renovation, so it looks like a clean property overall. Like, just driving by Google Drive, and then what was the other things I was able to see? Oh, from the town's perspective, because it was small town, I generally try to see if the MSA has at least 100,000 people. So we in this market, Dothan, they have if you look at the MSA, it's about 150,000. So it's not a hard fast rule, but it gives us a little bit better. I found it a little bit you find lending a little bit better, favorable if you have just a little bit more bigger town, at least 100,000 people. I also looked at their economic development website, the Chamber of Commerce website. I look at what they post, because that kind of give me a little idea, like, okay, what are they very active? Are they trying to recruit people or recruit businesses? And this one, I can tell that there's a lot of people that they are on the payroll, so they have to do something. So, and then when I call them, they provide a lot of information about the town. They basically told me like there's a lot of inflow of people during the day, because that is where things are happening. So there's a lot of it's also an interstate. If you see the town, it's a good big circle, and that's a good sign because there's a lot of intersection, and it just means that there's a lot of thoroughfare that goes through the town. So that is like the main hub wherever you pass through Florida to all the way to Georgia or whatever. So there's a lot of distribution, and there's actually a distribution center that like FedEx and also Amazon has created warehouses there. So all good signs. That's a lot of information from economic development. You can just, if you pick up the phone and you talk to them, they give you a whole bunch of information. Of course, all of these are just like phone calls, websites, internet searches, and then of course, they give, once you look at the deal, you have the financial data you have to evaluate. All that information, you've done it through, so this, I would like to say that these are our like confirmation that it's telling you, okay, it's a good market, good property, good something, but you still have to confirm. So it's like a due diligence that you have to keep going. So once we did the physical due diligence, we drove around the town, we talked to anybody who will talk to us, that just kind of give us a little Uber drivers are very good. Uber drivers, when you talk, if you have a chance, talk to Uber drivers. If you find one that tells you they've been there for their whole entire lives and they've seen the city have transformed, the downtown area is renovated. So those are all like good confirmation signs, right? So, and I walked down to the Chamber of Commerce to talk to the people that I talked to on the phone, and just to see what else they can share. And they basically share that good context with that. And this is something I probably will not pick up anywhere else. Basically, because of COVID, a lot of people have moved down to the panhandle of Florida, and they're driving the market prices up there, the home values and everything. So it's kind of pushing people up towards to Alabama. So it's kind of like increase the value in Alabama naturally. And that's where our market is. So all that context, that's just kind of give us we're feeling a little better and better about the deal as we do more due diligence on the deal.
Awesome, love it. That's an excellent research analysis. Okay, another question from the audience, from Evan. Once you've determined economic viability in the market and you've reviewed competitive and comparable rental rates, are there particular metrics that you focus on to decide if the opportunity might be worth pursuing? Like, if you recognize rents are on the market, are there thresholds you decide on as far as the value and the revenue gains that help you move forward? Wow, excellent question.
That's a nice question. Are you an underwriter, Evan? Yeah, there is no hard fast rule. I think at the end of the day, yeah, I think when we are looking at so when I look at when I'm underwriting a deal, this is typically how I think about it. Okay, look at the opportunity. So how much we can raise rents, how much renovation we have to put in, how much the total cost will be. And then I look at what the seller is asking. And then I also look at, okay, what does the lending terms look like? How much can we borrow? What terms are we getting? So that's another pie. And then I had to look at, okay, can we execute the business plan? And then how investor return look like? my reach our, I'm part of the investor because I'm investing in all the deals. So how does it look like? Is that favorable? So all these people all these pie, I feel like they have to win somehow. So you just kind of figure it out. Before, I want to say like we were targeting 15% IRR and 8% pref, 70-30 split. I think going forward, I feel my strategy has definitely changed. I think right now there's so many volatility in short-term economic situation. We really have to think longer term. So we got to figure like more like a 10-year horizon. I actually like more of the infinite return model. So I'm trying to figure out, okay, how can we make that happen where we buy a property, we fix it up, and we just hold it. We refi it with good debt, then we can hold it for a long time. Because I think it's once you put in the hard work, which is the first couple of years, it's good to kind of enjoy the rest of the time when you enjoy and reap your benefits. So hold on to that property for as long as you can. I think that's how you create generation wealth. So I that's kind of my thought going forward, how I look at deals. So
that's awesome. Thank you for sharing, Maggie. I like your approach, and I like that you mentioned that you're personally investing in all of your deals and keeping skin in the game and making sure that the returns are favorable for both sides, the general partners that are doing the work as well as the passive investors that are putting their money with you. So we talked about lessons learned as a passive investor. Now let's switch gears and talk about the lessons learned as a general partner, now that you've been doing it for about 3 years and continuing to build your business and work with your partners. What are some of the key lessons learned, and what would you recommend to folks that are maybe at the early stages, want to partner with other people or want to become general partners on a deal? What would you recommend to them from your position now, 3 years later?
yeah, I in terms of partnership,
Partnership or becoming general partner in general, or just doing syndications?
yes. In terms of finding a good partner it seems simple enough, but I'm just I feel very fortunate that I found these two great partners. You're going to go through ruts, and there will be days that you want to strangle each other. So, but then at the end of the day, do you have the same goal and the same strategy? Are you able to work out those differences? That's really important because it's really truly a marriage. So that's, I don't know how what context I can give you on that one, but because I feel very fortunate and on that part. In terms of the multifamily standpoint, I wrote down 3 things, like give yourself time, grace, and humility. And I thought about this because I was like, okay, there was like you overestimate what you can do in 1 year, and you underestimate what you can do in 3 years. So that was a thought that I had, like, because it took us a year and a half before we got our first deal, but it took a year and a half like doing the work every day to get to the first deal.
It was a grind. It was literally a grind.
It was a grind. So there was a time, and you really need to give yourself grace on when you don't get it and you keep falling and you're going to hit that bottom, and also give you humility, because I think I think that also, it keeps you humble, but also like if you're able to have humility, I feel like you learn better because you don't have any resistance from accepting any feedback. If you have too much pride and too much ego, you're going to have a hard time swallowing any new information that may be helpful for you. So I think that was first thing: time, grace, and humility.
I love it.
And the second is find yourself a mentor. That's the easiest answer. Find yourself like a good mentor, or surround yourself with good other like-minded people, because you're going to be in the rut. so you gotta be in the same people that can like keep on cheering you on and keep on you get back up and do and keep on running. Because one of my earlier mentors, who was a flipper, she has a saying. She says, "You only fail when you stop going." So if you keep on going, you're not failing. You only fail when you stop. So
Amazing.
that
That's
kept me.
incredible. That's incredible saying.
Yeah.
This is great. Folks, feel free to post more questions. We have about 5 more minutes left. In the meantime, Maggie, what do you do for fun? Or is it strictly business? No fun?
Lately, I read a lot. So a lot of more on the mindset books. So I just look at latest book I was reading, Think Like I'm a Monk by Jay Shetty.
I heard his name.
Yeah, that was a very good book. And what was the other book that I was reading? Eckhart Tolle. I can't think about the name of the book, but I like reading a lot of books lately. Just a lot more mindset books. So,
what is Jay Shetty's book on?
Think Like a Monk. So he actually, after he graduated college, he went on to become a monk for 3 years, and then he came back. He came back out because he think he can serve humanity better, and he's now like he does a lot of interviews on podcasting. So he has a lot of like deep conversation, and it's very good at how he asks questions because he has like a monk perspective. So I like that, and I liked just he calms me down. Like I think
that's awesome. Love it. Absolutely love it. So, okay. So I shared your website. I think there's another question. I saw their booth at Globe Street Multifamily Conference in LA, and it looked awesome. Not affordable for me at the moment, but would love to dig in more to that. No question. Thank you, Evan, for your feedback. And when you say you saw their booth, was that Sage booth? Oh, Costa. Yeah, Costa.
Oh, CoStar. Okay.
Yeah, they're expensive, but their reports are so comprehensive. We use it as well for our research when looking at the commercial properties, and it's just incredible. And folks, you don't have to have that membership. If you're working with a broker, most brokers have access to CoStar, so build a relationship with the brokers, and if they bring in your properties, ask for the reports from CoStar. You know, if you have good rapport, established a good rapport with the broker, they will absolutely be willing to help you, especially nowadays when there are fewer deals happening. And it's a lot more challenging for everyone, not just us investors, but brokers as well, because they live of commissions. So they will be interested in supporting investors interested to buy deals. Okay, this looks like a question. For someone just stepping into commercial, do you recommend any brokerage to look into, or even local brokers in New York, Brooklyn specifically? I don't think neither Maggie nor I work in New York or Brooklyn, Evan. Maggie, am I correct? You don't work in Brooklyn, right?
No, I do not. I don't have that capital.
Yeah, Evan, no worries. Evan, I would say go to local New York meetups. I'm sure you're going to meet some folks and you'll be able to ask them for recommendations that way. Yeah, we don't know anyone in New York. The market is very, especially multifamily, it's very tenant friendly. So it's a lot more challenging to work that market, and same applies to New Jersey. Yeah. Yeah, no, that's true. Yes, Evan, I used to have meetup events in both in the city and in New Jersey, but virtual meetups have become my way of doing things lately. I promise to come back to doing in-person events, but most likely they will be in New Jersey. But everyone is welcome to join us. Most likely they will be in Bergen County, New Jersey. Anyway, Maggie, thank you so much. Amazing interview. Thank you for all your feedback and the words of wisdom. I posted your email and your website, so folks, feel free to reach out to Maggie if you have any follow-up questions. She's a great resource and always willing to help others as well. Again, Maggie, thank you so much. Thank you everyone for your questions and for your participation. And as always, the recording will follow and will be available on our YouTube channel. Have a great night, everyone. Bye.
Good night. Thank you.